Hello all, welcome to Stock Analysis World. Today we will do detailed analysis on HEG Limited stocks. HEG company is India's largest manufacturer of ultra high power graphite electrodes which are mainly used in electric arc furnaces to produce steel. The company exports more than 70% of its production to more than 30 countries across the world. It has largest manufacturing unit in the world. HEG Limited has world's largest graphite electrode manufacturing facilities and its manufacturing capacity annually is more than 1 lakh tons. Is it monopoly company? Yes, it is monopoly company for manufacturing graphite electrodes in India. Not only that, the main income source is from graphite electrodes and minor income source is from power production. Yes, it has power plant also, hydroelectric power plant. Okay, majorly this 77 megawatts of electricity it is supplying to its plant, and whenever the power requirement fulfilled, then it supplies the electricity to the grid for adding more revenue. Is it monopoly company? Yes, it is monopoly company in the field of graphite electrode manufacturing. Major income is coming from graphite electrodes and minor income is coming from electric production. It has hydroelectric power plant which produces 77 megawatts of electricity. Majorly it supplies its electricity to the graphite manufacturing unit, electrode manufacturing unit. Minorly it sells to the grid. Let me tell the investment positives. HEG Limited is one of the largest manufacturer in the world and it has largest manufacturing units in India. Strong export presence is there. It exports more than 30 countries in the world and it supplies major steel producing companies in India. Every steel manufacturing unit is moving towards electric arc furnaces because electric arc furnaces produces lower emissions and decarbonization. Because of that reason, HEG Limited started manufacturing graphite electrodes for electric arc furnaces. So there is a strong growth prospects in the future for this company. One more advantage is the company has very low debt values and very high cash reserves are there to withstand in case any industry downturn happened. One more advantage is high entry barriers. If a normal company want to enter into this field, it should have very high technology to produce UHP graphite electrodes for electric arc furnaces, and it should have specialized raw material, that is coke, and customer trust should also be there. One more advantage is its financial performance. It was really good, around 2500 crores revenue generated in the financial year 2025-26 and 181 crores net profit it generated, and operating profit efficiency also really good when compared to year on year. Let us talk about the risks. The first risk is the price fluctuations of the graphite electrodes because it depends on the steel demand in our country and globally as well. If demand increases or decreases, that indirectly influences the price of the graphite electrodes, so earnings will get affected. And global economic activity also affects the prices of the graphite electrodes. And second one is export. The 70% of the production this company exporting to more than 30 countries across the world. So major revenue is coming from the export. Because of that reason, if any regulatory changes happens, export duty increases, or if the demand decreases globally or any competition occurs outside India, then that will affect indirectly and directly the earnings of the company. One more risk is raw material availability. If any irregularities happens in the supplying raw materials to the manufacturing units, that also affects the earnings and prices indirectly. And Chinese competition is also one of the risk. China can influence the prices globally by supplying over capacity sometimes. So that is also one of the risk. Let us discuss valuation of the stock. Currently, it is not overbought, it is not overvalued as well. So, one thing one should be cautious about this stock is this stock is traded historical cycles. In the historical cycles, whenever cycle goes up, the stock price also go up. Whenever comes down, then stock price eventually comes down. One should be careful and carefully observe this stock, and carefully they need to observe the demands of graphite electrodes, the price of the graphite electrode, and demand in the steel as well. And rather than depending on short term earnings of the stock, one has to focus the cycles of the stock so that they can do correct valuation and they can invest at right time. Current price of the stock is 633, and the market capitalization is 12,000 crores. ROC, ROE values are okay, low debt company, and dividend is also okay, 0.5 percentage yield. Valuation is okay, the PE value is matching with the industry PE, and the chart is clearly showing that it is under consolidation phase. The technical values are okay. So rather than depending on the technical values, one should invest in the cyclical phases of the stock by observing global market trend and global steel demand and electrode prices. Then that will be more suitable to this stock as per my analysis. Who can buy this stock? Those who have long-term investment horizon around 5 to 10 years, they can go for this stock. Okay, rather than depending on the technical values and short-term earnings, one has to look bear case and bull case. So they need to invest when there is a recovery in the prices of the graphite electrodes, when there is constant demand in the steel production over the globally. So these cases they have to observe there is strong accurate supply of the raw material. When these cases happens, then bull case will start in the market. So at that time, if they invest, they can gain the profits rather than short-term earnings. When there is price pressures in the graphite electrodes, and when there is very less demand on steel production globally, and over supply of the raw materials, when this is the case, then one has to withdraw their amounts and then invest at the right time. So this is my analysis. Okay, this is the detailed analysis of the HEG Limited. It's a monopoly company. We covered business overview, strong technical points, and the growth drivers and risks. Okay, when to invest, when not to invest, we know demand factors, and all these factors we discussed in the detailed analysis of this stock. If you like this content, okay, subscribe my channel. Daily you will get one video analysis of one stock daily basis. Okay, and refer this channel to your friends and family members, and subscribe our channel. Thank you very much.